Thank you, Madam Speaker. Madam Speaker, I'd like to inform Parliament of the key findings of the Financial Sector Stability Review, or the FSSR, for Fiji was recently undertaken by the IMF. The review provided a number of critical insights and recommendations that could be implemented in a coherent and systematic manner. Madam Speaker, the IMF mission was here from 14th to the 27th of February 2018, comprising of 7 experts, headed by a Mr. Peter Lomas and various other members who were there of his team. The mission team had consultation with the Reserve Bank of Fiji, the Ministerial Economy, the Auditor General's Office, Fiji National Provident Fund, Fiji Development Bank, the Housing Authority, commercial banks, credit institutions and unions, and insurance companies. Madam Speaker, for the information of Parliament, the financial sector includes commercial banks, insurance companies and brokers, credit institutions, Fiji National Provident Fund, the South Pacific Stock Exchange, the unit trusts, stockbrokers and foreign exchange dealers. These are the members of the financial sector. As highlighted in the ministerial statement last week, Madam Speaker, the Fijian economy has achieved 8 years of uninterrupted growth and is on a sustainable path for steady growth thanks to the well-designed pro-growth policies of government. Naturally, this has led to the expansion of the Fiji's financial system. On average, for the last 10 years, the annualized rate of growth has been around 9.3% in terms of assets, comprising almost 170% of our GDP. In fact, the financial sector has expanded at a similar rate as that of nominal economic growth. Madam Speaker, our financial sector has leapfrogged. A country the size of Fiji has 6 commercial banks. 5 of these 6 banks are foreign-owned, owned by reputable financial institutions outside of Fiji. Of course, it was only under this government we now have a Fijian-owned bank. This clearly demonstrates the level of confidence and optimism the private sector has in the Fijian economy. The policies espoused by the Bainimarama government and now the Fiji First government has contributed to the solid foundation for growth. Policy certainty, stronger public institutions and good corporate governance is essential for the private sector to thrive and continue with quality investments as our country has experienced. Moreover, Madam Speaker, the growth prospects look very strong and a marked improvement in productivity has been noted in the key sectors of the economy. With the upbeat performance and modernization of the Fijian economy, we've seen an increase in the depth and sophistication of our financial system. This includes offering of digital financial services and online-based banking platforms, and expansion of the financial inclusion footprint to a wider area, especially to rural, deep rural and maritime communities. Every Fijian is benefiting from the improvement in the financial sector, Madam Speaker. Prior to 2006, Madam Speaker, it would have been a dream to imagine that our ordinary Fijians, such as those based in provinces like Bua, would have access to FPOS machines. All this has become possible under the leadership of our Prime Minister, of course. We will further boost the services, and this is reflected in the targeted investments we are doing, such as the cable project to Banwalevu, which I'll speak on later on. Infrastructure investments such as this will allow financial institutions to further expand their reach, Madam Speaker. We are in the digital era and need to be on par with the cutting-edge technologies. Assessing the comments made by the opposition in relation to the e-ticketing, one could imagine where Fiji would be in the digital space if they were on this side of the House. I leave it to the people of this beloved country to judge and see the tangible positive benefits the current government policies brought in. Madam Speaker, as a responsible government, we need to ensure that the necessary safeguards are in place to ensure there is financial stability in lieu of the increasing sophistication, buoyant performance of the economy and deepening of our financial system. This is precisely the reason for requesting the IMF to undertake a review of the stability of Fiji's financial sector. It's always good to get a third-party assessment. The first similar review was conducted in 2006 under the IMF's Financial Sector Assessment Program, or FSAP. The key recommendation of the 2006 FSAP led to some significant reforms in the last 5 to 8 years, which included the reform of the Fiji National Provident Fund, the strengthening of the supervisory capacity of the RBF to a more risk-based approach, and the review of the Companies Act, of course, which this Parliament approved. The implementation of these recommendations has strengthened some of the key institutions in our financial system and the legislative and regulatory frameworks in which they operate. Madam Speaker, periodic reviews of the financial sector is critical. Financial sector stability reviews help identify financial sector vulnerabilities with the key objective of formulating and implementing financial sector reform programs which are supported by intensive follow-up technical assistance. The program seeks to review country-specific risks and vulnerabilities, the adequacy of institutional frameworks, and capacity in financial regulation and supervision, as well as crisis prevention and management. In fact, Madam Speaker, Fiji is only the 5th country in the world and the first in the Pacific region to undergo a financial sector stability review. Madam Speaker, the IMF has concluded the 2018 FSSR for Fiji with a stress test assessment indicating that the banking system in Fiji as a whole appears to be resilient to shocks similar to those experienced in the last 15 years. However, we need to be mindful of certain institutions that are vulnerable to downturns in specific sectors due to their concentrated loan books and significant large commercial exposures. To revamp our financial system, the 2018 FSSR mission has made some key recommendations for the continued strengthening of the RBF's regulatory role, which are as follows. 1. Given the dependence of the banking sector on foreign banking groups, supervision will need to ensure a strong link from the micro-supervision analysis to macro-prudential policy. The supervisory approach will need to continue to evolve to become more forward-looking, to proactively identify and tackle risks in the banking system. There is a need to strengthen the RBF's capacity for the early detection of emergency stress in banks and corrective action. The RBF should introduce recovery planning requirements for commercial banks. And thirdly, amendments to the Banking Act 1995 will be required to address deficiency in the regulatory framework. The current legislation is silent on key matters of consolidated supervision and major acquisitions. And this, of course, will be brought forward to Parliament in time to come soon. Madam Speaker, it is therefore fundamental to have a sound, stable and healthy financial system to ensure trust in the system, efficient allocation of resources and distribution of risks across the economy. More importantly, Madam Speaker, this would prevent any run on banks as we experienced in 1995, Madam Speaker. Of course, Madam Speaker, speaking on run on banks, Madam Speaker, I'd like to highlight the collapse of the National Bank of Fiji in the SBT government days in 1995, which our country is still reeling from, Madam Speaker. We're still paying for the largest financial scandal in Fiji's history. The then government issued $209 million in bonds to bail out the NBF. The funds borrowed were used to pay NBF depositors. Madam Speaker, the overall cost, including the interest payment, has exceeded $500 million. Yes, exceeded $500 million, Madam Speaker. The initial bonds have matured, but both the SDL government and later on the Fiji First government has had to roll over this debt. This means that we are still paying for this debt, and it is likely that future generations will continue to pay for it. This, in fact, has created intergenerational inequity. The current and future generation has to bear the cost burden of the mismanagement of a state-owned bank under the SBT government. The Prime Minister then, of course, is now the current leader of SODELPA. The situation was, of course, exacerbated by the then senior government ministers who encouraged bad governance, nepotism and interference in the affairs of NBF. People who actually given handwritten notes to the bank manager to give loans. Everybody knows about this. Madam Speaker, the interest cost on the debt that was rolled over during the Bainimarama government since 2007 is approximately $200 million. This means that the debt servicing cost of FFP has increased because of the financial decay created by the then SBT government, or the Fiji First government. Till to date, we have over $6 million in our books in the form of contingent liabilities for NBF-related cases. Madam Speaker, imagine the missed opportunities that $500 million could have funded. We could have built more roads, schools, hospitals, improved services, and the list, of course, goes on. The Fiji First government, Madam Speaker, will ensure that history does not repeat. In fact, under the stewardship of the current government, we have our first locally owned commercial bank, the HFC Bank. The 2018 FSSR mission has made some specific recommendations to enhance Fiji's capacity to manage a financial crisis through the following methodologies. Firstly, strengthen the domestic coordination arrangements in the financial sector stability issues by establishing the Financial System Stability Committee, or FSSR, between the Ministry of Economy and the Reserve Bank of Fiji. We'll be discussing this further with the RBF, and we hope to make some announcement on this issue in the next budget. 2, Fiji should pursue the initiative for a deposit insurance framework. There is a major gap in the financial safety net and creates a significant risk of depositor runs and interbank contagion. It also increases the pressure on the government to bail out banks, as we've seen throughout Europe and the USA, where the governments actually stepped in and bailed out banks. Accordingly, the 2018 FSSR mission suggests that the RBF, in close liaison with the Ministry of Economy, should undertake an assessment of the costs and benefits of deposit insurance, including possible design options. 3. Cross-border coordination for bank recovery and resolution is essential for Fiji, given the dominance of foreign-owned banks. Necessary arrangements are to be formalized with relevant home supervisors of foreign banks operating in Fiji in this regard. But as Speaker, as we know, that out of the 6 banks, we now only have one Fijian commercially owned bank, which has come to fruition only in the last few years. And of course, the others come from predominantly Australia. We've got one from Papua New Guinea, of course, and we've got ANZ also, which is headquartered in Australia, including Westpac. You have Bank of Baroda, which is of course headquartered in India. Madam Speaker, the 2018 FSSR mission has also looked at the governance frameworks for statutory non-bank financial institutions, namely the Fiji Development Bank, the Housing Authority, and the Fiji National Provident Fund. Key recommendations of these institutions note the government to strengthen its boards through the expansion of boards and phasing out the heavy use of advisors on board committees, staggering board terms to improve governance continuity, and regular evaluation of board performance by third parties. The institutions must focus their strategies on core competencies and missions. As boards are strengthened, they should review with government the focus of the strategies on delivering superior core services to members and customers. As you've seen in the past, a lot of the statutory bodies started going into different areas without having the right level of competency and indeed the right level of management skill sets, Madam Speaker. Madam Speaker, the key area highlighted by the 2018 FSSR is to reform the credit union sector. Government is at the moment, Madam Speaker, seriously looking into this area, Madam Speaker. Madam Speaker, in addition to ensuring that the financial sector remains strong, resilient and is able to withstand any shocks, it is vital to further develop our capital markets. In this regard, Government is undertaking a number of initiatives, Madam Speaker, which of course include the reopening of the government bonds that we talked about. With the assistance of the Commonwealth Secretariat, the Fijian Government has commenced a reopening of government bonds. This is mainly due to the fragmentation of government domestic securities through distribution of outstanding amount evenly into a larger number of small-sized bonds, each maturing at different points of time. Fragmentation affects market liquidity adversely, which is as unfavorable for the issuer as it is for the other market participants. In the reopening, we issue additional amounts of a previously issued bond. Reopened bonds, Madam Speaker, have the same maturity date and interest rate as the original bonds, but a different issue date and usually a different price. Reopening assists in the secondary market development as more volume is built, which creates liquidity. Madam Speaker, as you see, most bonds, the government bonds in Fiji, there's no secondary market trading. People simply buy the bond, keep it in the drawer and use it at maturity date. We need to create that level of secondary market trading, which the Commonwealth actually is helping us with, and also to be able to lump the bonds together. Madam Speaker, the dematerialization is the move from physical certificates to electronic bookkeeping. Government securities are currently held in the scrip form. Absence of dematerialization makes it cumbersome to trade in government securities. Once you have electronic securitization, Madam Speaker, it makes it a lot easier to trade. Government is undertaking the necessary groundwork in relation to transiting to dematerialization. This initiative will also encourage secondary market trade of government securities, as highlighted, Madam Speaker. And indeed, Madam Speaker, we can also see that we will have other Pacific Island countries that will be interested in also trading in the secondary market in Fiji, and we can open up then our bonds to be in a much better and attractive position. And of course, in this context, Madam Speaker, we have the green bonds that we have already highlighted. I'll be issuing a statement on that as to how it's going to be listed on the London Stock Exchange. The idea is, whilst the amount compared to other countries is relatively small, the fact of the matter is that we're putting foot forward into the London Stock Exchange, and with the right rules and regulations in place, it makes Fiji attractive for bond trading and indeed the secondary market in the secondary markets. In conclusion, Madam Speaker, we wish to reiterate the importance of having a stable financial system for Fiji as a developing and growing economy. When we have financial stability through robust financial infrastructure and sound financial institutions and market, it fosters the process of wealth accumulation by individuals, businesses and the government. As highlighted again, Madam Speaker, we are looking at giving shares to ordinary Fijians in the FEA, through FEA, so they can participate in the capital markets. They get to appreciate the capital markets. There's buying and trading of stock, buying and trading of shares. In this way, we actually create new revenue mechanisms, new revenue processes for ordinary Fijians, but also grow the capital markets. And indeed, we must take advantage of the fact that we are situated in the hub of the Pacific and further our position as a financial hub in the Pacific, Madam Speaker. As highlighted, this is important because wealth accumulation enables our country to flourish and assures our ability to manage unanticipated, unavoidable adverse events. So the trick is, Madam Speaker, we need to be able to identify the risks now. The trick is to be able to invite people who can tell us, through their experience, through their expertise, to say, look, this is what can happen. These are the risks. You have, out of the 6 banks, you have 5 of them are foreign banks. Now, what can happen if, for example, the parent company, something happens to the parent company? What are the steps that we should take? So it is important for us to be able to be very open about it. We need to be able to discuss it in a very impartial manner as to what are the risks, what are the steps we take, what are the contingencies we need to have in place to ensure that we have that not only that level of security for us, but it also, in fact, Madam Speaker, makes us more attractive to investors because they know that your financial system is not only stable in the good times, but it will also be stable in times when it's not necessarily good because of the events that may be affected because of globalization, Madam Speaker. So, Madam Speaker, with that in mind, I present this short report on the financial sector stability review for Fiji. Thank you, Madam Speaker.